Good afternoon, this is Sheldon here from the Currency Advisory Desk. Well, looking back, has the RBI played its cards right by not reducing the key rates during its last monetary review? Because we've seen the trend of the dollar for the past couple of days, and the dollar is showing a lot of bearishness, which is, you could say, a trump card played by RBI by not reducing any key rates. This is something what only time will tell us. However, we have seen that the rupee has further appreciated below 55.55 levels. This was a key level, and this is more due to the positive measures taken by the European authorities during the EU summit last week. Now, the US dollar index is currently trading at 81.91, which is marginally up as compared to yesterday. We expect further downward pressure on the dollar, and if it breaks the important support level of 55, then we can see it slide down to around probably 54.50 to 54.20 kind of levels. The ISM Manufacturing Purchase Managers Index in the US came at 49.7 yesterday. Now, for the first time since July 2009, this has dropped so much, which indicates further contraction in the world's largest economy. Eurostat, the EU's statistics office, also came out with an unemployment report which shows that the EU's unemployment rate has risen to 11.1% in May, which is up as against 11% for the last month. Now, this is the highest since the euro was launched in 1999. So from 1999 to 2012, the European Union has not witnessed such a high unemployment rate. Further, the euro is trading at 1.2595 levels against the dollar after hitting highs of 1.2692 a couple of days back. Now, we expect the euro to weaken against the rupee as we expect the markets to cool off from the euphoria of last week's EU summit, because the entire rally was more of news driven, and on the face of it, if we took it, the entire whatever resolutions were passed, it seemed that they are beneficial for the eurozone. However, as we get more detailed reports and we do a more detailed study of the fine print, we know that there are a lot of clauses and lot of ifs and buts that are there in this particular resolution that has been passed. So we expect the euro to weaken against the rupee. Moving to UK. Well, UK's manufacturing PMI was higher at 48.6 versus an expected of 46.6 yesterday. However, it's still below the neutral level of 50. Now, this is the second month in a row that the number is below 50, which indicates that the British economy may be headed for further recession, a deeper recession that is. Now, this triggers increased expectations of a further quantitative easing from the Bank of England. An expectation of a further 50 billion pounds of buying in the bond market is being rumored at present. The pound may give up some of its gains against the rupee in the near term. Moving to Asia Pacific, well, the Bank of Japan may induce another round of easing, even though the Tankan index number, which shows an increase in business confidence amongst the large Japanese manufacturers, indicates that they are moving towards a more positive sentiment. However, a fall in commodity prices, especially the significant reduction in oil price, has helped boost confidence amongst the Japanese business groups. So, as we know that Japan is increasingly dependent on oil energy to meet its demands due to the closure of the nuclear power plants, we expect the yen to strengthen further against the dollar. Now, in rupee terms also, the yen has depreciated substantially in the past few trading sessions, and we expect it to depreciate further owing to the dollar cross rate. Now, globally, if we see, with reducing commodity prices world over, there is a glut of supply of raw materials. Raw materials are just being flooded. Even if we look at copper or if we take oil, there is a lot of supply. Even with the Iran embargo that is going on, we have a lot of supply in the market. However, the demand is where the entire problem is arising. China HSBC PMI is still below the deciding 50 levels, and this shows that demand from this giant is reduced, and it's taking a toll on exports and growth of other economies, because majority, if we see the exports of raw materials, China accounts for around 60 to 70% of raw material demand. So if China slows down, definitely the other regions growth or other areas growth also slows down. Now, we expect the overall bearish trend to continue in the markets until there is something positive, probably from a global front, either easing from US or probably a QE from you could say UK or Eurozone come up with some definitive measures. Looking at technicals, well, the trend for the dollar is bearish, and we see a support at around 52.94 on the downside and a resistance of around 54.32 on the upside. And for the euro, we see a support at around 68.70 on the downside and a resistance of around 70.23 on the upside. Well, for the pound, the trend is also bearish. We see the support at around 85.89 on the downside, and we see a resistance at around 87.56 on the upside. Well, that's it for today.